Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, guys. Today we will continue our story around the dollar index, euro currency. So in the weekend we have taken a look at the euro currency. Now we just put the same view on the dollar index because recent action on the dollar index is more bright and it clearly indicates what is going on here. But at the same time we should be guys ready for some traps and something of that sort, because currently market is rather thin, and investors even talk about that it becomes thin even earlier than usual. So usually market becomes thin closer to the holidays, somewhere in Thursday and Friday, but today is Tuesday and market already has a real lack of liquidity. That's why we see some really nervous action, extreme volatility on the euro yen. So for example, on the 4-hour time frame chart, just take a look what is going on here. It's very choppy and sloppy action. So it spikes, something really, some speculators trying to shake the boat, and this leads to some nervousness on the market, tight ranges, and some market right now shows some narrowing action, and it's not really very big pleasure to trade in such circumstances. So, and when the market is forming, then stands in contraction action, when the following swing is smaller than the previous one, it always open road for contradictory patterns, that you could find the patterns that could be in one direction or in another direction. For example, even on this picture, you could recognize two possible patterns. This could be, for example, butterfly to the downside, right? Or it will be the butterfly to the upside. And in the current swings, it's very difficult to say what particular pattern will be formed. That's why when the market stands in the contraction stage, it's more difficult to trade. So taking it all together and keeping in mind this not really very good background for trading, we'll try to take a look at what's going on here. So on the daily chart of the dollar index, we have the same triangle pattern that's developing on the euro currency as well. But mostly, guys, here we're interested with this action. So here you could see some kind of the hand shoulders forming in the direction to the downside, while at the same time in this final stage of this pattern we also have some kind of the reverse hand shoulders in the opposite direction. And major concern was what particular pattern will take the lead and what pattern we should follow. And it mostly will depend on the breakout, either this top or that low, because one or other breakout will lead to the failure of the corresponding pattern, because both shoulders already have been formed. So if you take a look at the large pattern, here is the top of the shoulder has been formed. Market already started move down. If it suddenly somehow will return back up and taking out this top, this will be negative sign for the hand shoulders, and it could lead to this failure and upward continuation here. Correspondingly, on the euro currency, we will get the downward action, while dropping to the downside below these lows will lead to the failure of this pattern, and correspondingly on the euro currency, we will get the upward continuation. So this question is simple. So by taking a look at the 4-hour time frame chart, we have mostly bearish action by some moments. It's really very important. First of all, take a look at this collapse that has happened here. We have potentially bullish pattern, and collapse on the slope of the right shoulder should not be the same as in the first stage of the hand shoulders pattern, because here we have collapse and here. In this moment, collapse is reasonable because bears are still control the market. But gradually, through the forming of the hand shoulders, the controlling of the market should come to the bulls. But we do not see here at this moment. That is too flat retracement. It's upside. Okay, no really acceleration. We do not see this kind of action, but in opposite direction. It's mostly gradual. And then following collapse right at the final stage of the hand shoulders. This is not good sign. But this is only the half of the strategy. So take a look at collapse has been stopped by the multiple support. So this fib level, they don't have it on the chart, but you could draw it by yourself. But also this is sentiment area. It's very important. This is weekly pivot support one and monthly pivot point. And this collapse has been stopped by this action. Right at the bottom of the left shoulder. So bottom of the shoulder has been formed. Here, guys, market should turn to the extension stage, and it really has tried. So take a look. This was acceleration, attempt of the acceleration, but suddenly stopped, and another collapse has happened. So it's really also significant drop, a fast drop. As a result, we've got the bearish pattern, Scottish triple to sell right inside the right shoulder of the bullish pattern. This is definitely not a good sign. And as previously, market was supported by this sentiment support area, is pushed up, but as it's dropping right back down again, there's more chances the market will break this area. And in general, this reversal here at this point is irrational. It doesn't correspond to overall logic and the market mechanics with this pattern. That's why most probable that we will get downside action here and taking out of these lows. But you should be ready for different failures and surprises, because a lot of speculation right now stands around the tax bill. So today we'll be voting, and the situation could change very rapidly on the market. So currently, it's better to trade clear patterns on your back. So for example, if you have got this triple two, you could take the position and the first signs of your moving in your favor, move your stop to the break even, grab the profit from the sale, from the half of your position, and just watch the movie. So trade in these days, guys, before the holidays, it's better to trade with the clear patterns and not really marry any position. So protect your position as soon as possible and take the at least partial profit where is possible. So that's why currently, guys, we probably could talk about at least, I would not talk about the real major downward drop and continuation with daily hand shoulders with this pattern. Of course, here by following this logic of this pattern, we could get this action, right, to the downside. But we will not talk about it right now. We will focus on the minor action. So if we just here minor ABCD pattern, so probably here we could talk at least about this action. So somewhere to the 93 even area. So that could become the nearest target of this possible action to the downside. This breakout and failure of the hand shoulders, potentially, yes, market could drop further to the bottom of the shoulder and even lower. But right now, it's better to move step by step, the minor step, because, as I said, lack of liquidity, some speculation around tax bill before the year end, thin market that lets market makers to shake the boat and shows a lot of stop hunting. So that's all the parts of this pre-Christmas trading. So let's see what will happen. But in general, guys, in the current circumstances, I don't think that we have any good chance to go long here. Overall situation and this reversal mostly suggests further drop and downward continuation, at least to the 93 even area.